Eric Muaded, Muaded.com, with a weekend market analysis for world markets for the weekend of May 23rd and May 24th, 2015. Let's take a look at how Asian markets closed, and we see that some of the biggest movers were, again, China was up about almost 3%, Hong Kong was up 1.7%, and we see that the KOSPI was also up nicely about 1%. Japan was up slightly, and we see that Australia was unchanged here. So that's how Asian markets close. Take a look at European markets, and we see at the close of the European markets pretty much a down, slightly down to mixed. Well, I guess the biggest mover was Germany, which was down slightly about 0.4%. FTSE was up 0.26%, and the French market almost unchanged. If we take a look at Americas here, we can see that as of right now, Brazil is down about 1.67%. We see here that the Argentine market is down 2.63%, and the other markets pretty much unchanged. And also we see that the Canadian market is unchanged also. Right now, as I record this, with about half a trading day to go, US markets are pretty much slightly down to mixed. So that's the picture going into the close of Friday. Otherwise, we'll see how markets are going to close in the US, excuse me, and also in the Americas. All right, let's go to the videos and check out the analysis. And we begin by taking a look at the Canadian market from an hourly chart, and we can see coming off the highs recently here, there was a break in the RSI, and that break is what gives us, so the break there corresponds with this price movement somewhere here. And so if we can draw a simple straight line from there, we can see that it gives us where the market has been stalling, coming back to this point there, which is off the highs here. And again, recently we see that we've come here over the last 2 days and we seem to be stalling. So for the Canadian market to do well, it definitely does need to move above that line of resistance. Right now we are seeing hourly resistance just like we had seen in the US markets. If you take a look at the Canadian market daily, we can also see that we had talked about this the last weekend analysis, that this market had come back to this line of support where we saw RSI double bottom on this line. This line had been established connecting previous lows, and so once the market came here and we did see a double bottom, the thinking that the market was actually going to bounce, we got that bounce. Also happened to be a bounce around 200-day moving average, but you also see that we are trading very close to both the 200-day here and the 50-day moving average. So generally this is a stable market to sideways market, and maybe until we can decide whether we can start building on and maybe take out recent highs, or if for a bearish move, if we break below this 200-day moving average, then the market could be poised to go lower. So a breakout would be bullish and a breakdown would be bearish, and for now generally we are stuck in this sideways action. As shown earlier, we see that the Brazilian market is having a big down day. We take a look at the EWZ, the Brazilian ETF trading here in the US, and we can see here that there was a break here, resistance failing to hold above that breakout level, so that breakout failed. So that's one reason why the market is pulling back. There's also another reason, is if you take this straight line of the break, there was a break here, and this break point came off the highs here. And so if we draw a simple line from there, we can see the market didn't even get as high as that line, and also did show double bottom resistance, which also happens to be a break of this level here. So there's another break here which was responsible for this drop, and we can draw another line from there which would look something like this, and you can see that also confirms this double top resistance on the weekly there for the Brazilian market, hence the reason why we are seeing this pullback. So on the weekly, it looks like the Brazilian market did show that pullback setup, and we are seeing that setup. If we take a look at the actual Brazilian market in the way of the daily, we also see that the daily is seemingly breaking down. There was supposed to be a support level here. Over the last couple of days, we broke down there. We also happened to move below the 50 level on the daily RSI, which was during this drop. So now we are back testing this upward sloping 50-day moving average. So if you're looking for a reason for this market to move higher, you got two reasons. Reason number one is now that it's come back to test the 50-day moving average, it could hold support there. Also, there's a line like that. This is what it's being testing, or what is being tested right now, because ever since we had this move above this line, this is off these lows, the Brazilian market has gone on to see short-term higher move. And so now we've come all the way back and back testing this line. So if we can get a bounce off that line, that would be where the market finds a bounce, and also coming back to test the 50-day moving average. So yes, the weeklies did show pullback, but now we are looking at the dailies that could possibly be showing that the market is trying to find support here at the 50-day moving average, and also here at the back test of this daily RSI line. If we take a look at the Argentine market, we can see that on the weekly, it has failed to break out after several weeks of attempts. So here we see that it did try and break out above that 12,500 level, failed, which is not good short term. We also see that on the monthly, similar type breakout that has been rejected here, trying to break out above that 12,500 level. So that market is on a pullback mode. If we take a look at the daily, we can see that the daily with a down day on Friday is back testing this 50-day moving average. So what happens here around the 50-day moving average could be an area of support. Otherwise, if that doesn't hold, of course, we have to now look at the possibility of the market coming back to test the 200-day moving average. If we take a look at the Mexico index, we can see that also, like other American markets here, it failed to break out on the weekly, and since this failed breakout here, it's seen a big down week. We can also see that happens to be where the RSI had broken down. So this break here in the RSI previously last year brought it off the highs there. We draw a simple line, and again we see a perfect double top resistance. So yes, there's a pullback here, and that's why we are seeing this market drop this past week. Also, we can see that the monthly is not looking that great. If you take a look at the monthly, you can see that connecting the highs and this node here, the market needs to be breaking out above this declining line of resistance for this to be a new bull market leg. But you can see unless it can break out, we are always going to be struggling to make new high ground. So until we see a breakout here, this market is suspect. Take a look at the daily, where we see evidence of potential support, again just like we've seen in the last couple of charts, coming back to test an upward sloping 50-day moving average could be an area of support here. Also, the daily RSI has come back to what could be support area, connecting the recent daily lows here. So if this holds, one can assume that on a day-to-day, the market could be finding support after this recent pullback. So in my opinion here, some of the markets are showing that on the daily, they have yes pulled back, but could be finding some stability based on where they are coming back to test the 50-day moving average, and also based on RSI support lines. Let's take a look at some European markets. We begin by taking a look at the French market. On the daily chart, we can see that it has come off the highs here. So that pullback did take place, but once it came back to the support line here, it held, also coming back to the RSI line, uniformity line, that also held. So last weekend we talked about that being possibly where they find support, and that was the case. So we see the market recovering, but now we are seeing evidence that probably this could be a problematic area. Market needs to clear this topside resistance connecting the highs, on the daily, connecting the highs here, here, and now here. It needs to move above that if it's gonna see some traction to the upside. So that seems to be resistance on a day-to-day basis. Also, there's another line that can be drawn connecting the previous highs. So this line here was a nice entry on the way when the market was moving higher, so that breakout took place. This breakout here corresponds with this price breakout, and if we extend that same line, we can see that as long as the market was holding during this period, when the market was holding above this line extension, we can see that we saw a very nice move in the market from here all the way to here. So the market's been bullish above the blue line. Now, what's interesting here is ever since we broke below that line here, so that break of that line happens to have brought the market off the highs, and now we've worked our way below the line and are back testing it here. If this becomes resistance, we're going to pull back, and we're also going to see the price pull back here. Otherwise, for this market to do well, it generally means that it has to clear yet another line of resistance, which means it has to trade above that blue line. So that's how I would look at this one. We take a look at the weekly for the French market, and the weekly looks great because it's found support at the 10-week moving average, and as long as it's trading above the 10-week moving average, the market should continue trading well. We also see that it held above the previous line of a breakout. So you can see here previously, once it broke out here, we had a nice move in the market there, nice surge. And so a line extension, very simple line extension, shows that once we came here and found support on the weekly, this market did bounce. So as long as on the weekly we are holding above this line, it generally means that Europeans market should be trading well. Keep in mind, if you take a look at the French market, on the monthly, we are trading well above 69.1. And as long as the monthly is trading above 69.1, this is a market that should continue to move higher on a month-to-month basis. If we take a look at the German market on a weekly chart, still looks good. Managed to move back above the 10-week moving average, which is good. We also see that the RSI did come and find support on the line extension, and this line extension was good during this breakout here. You can see that this line was the previous line connecting the previous highs, and once the market jumped above that line here, we had a nice explosion in price. And so what we do is we extend that same line, and you can see the markets come back here, showing that it held with uniform activity with the double bottom support. So that's what we needed to see. So the market does look like it is showing support and should be seeing higher prices as long as the weekly RSI is above this line. On the monthly, we can see that the monthly continues trading well above 69.1 here. This is very nice action. Market holding above 69.1. It's great, also suggesting that it could break out past recent all-time monthly closing highs just under 12,000. So the monthly looks good, weekly looks good, day to day it could pull back, but the weeklies and the monthlies do dictate where the market will be weeks and months ahead. If we take a look at the London market, the FTSE, we can see that unlike the other two markets, the French market and the German market, it is not trading above 69.1, which shows that it is not the strongest market, even though we can see a price breakout here, which is okay, but it lacks the momentum, because you can see that the RSI is not trading at 3-year highs. So it doesn't meet the minimum requirement for a strong market. RSIs are not at 3-year highs. We also see that the MACDs are also not at 3-year highs. So the MACDs are also not showing momentum. So that's why this market has been struggling, in my opinion. If you take a look at the FTSE from a weekly chart, you can also see that the RSI has failed to hold above this level going back about 2-3 years. So this has been resistance going back a long ways, which might explain why this market is not very stable. It seems to have this very inconsistent price action, and that's why this is one market that is not in the leadership when you look at across the world, and not the greatest looking chart. If you take a look at the daily continues to trade in a wedge, connecting the tops there and also connecting the bottom. So we are trading in a wedge, and eventually we are going to resolve by either breaking out for a nice move higher or breaking down for a bearish move. Otherwise, not the strongest looking. It's sideways for me, and until we can break out and at least show some strength on the monthly and weekly charts, this market seems to be the one that is underperforming on some of the charts that we are watching out of the European markets. If we take a look at the Russian market by way of the RSX ETF that trades in the US, we can see that it is down this week slightly, about 2.75%. It's come back to a level where the RSI has been stalling. For example, it had a break here middle of last year, and we can draw a line from there, something like that. You can see that this is becoming resistance, which might indicate even lower prices. For this market, the Russian market, to do well, it needs to hold above that line. This line has been actually telegraphing down moves in the Russian market. If you go back even to late 2013, there was resistance here, which brought the market off the highs there, and since then market's gone to see lower prices, and so it needs to be trading above this line if it's gonna change its ways and if it's gonna see higher prices. So it needs to take out the blue line. Otherwise, for now, it looks like it is resistance as far as the Russian markets are concerned. If we take a look at the Swedish market, we can see that it also continues to trade well, finally moving back above that 10-week moving average after a recent pullback. We can also see that it is finding support above, or you can see this entry here, this movement in the RSI, which began the move in 2015. A nice explosion in price, and so we can draw a line from here, and you can see that as long as it can recapture back above this line like it is doing right now, this is a market that over time should continue to see higher prices on a week-to-week basis. And so looks good as long as it is holding above this line there. If we take a look at the monthly, you can see that it continues to trade well. Monthly is trading above 69.1, which is where as you can see, ever since it moved above 69.1, which is this point here, sometime beginning of October of 2014, market went on a good run, and as long as the RSI is holding above this threshold, this market should do well. Watch the monthly closing high, because if it can break out above recent monthly closing highs, here's another market that should also be trading well. Right now looks good because of the way the monthly is looking. Now on a day-to-day basis, we can see, just like other markets we've shown, there seems to be some type of daily resistance. If you connect the tops like this, you can see that the Swedish market does need to move above this declining line of resistance. If it can move above this line of resistance, then the market is due to recover, so it needs to move above this line here if it's going to do well. Otherwise, if it continues showing resistance on a day-to-day basis, then one can expect the markets to be on a pullback mode for now. So this is the line to watch for short-term resistance or for a breakout to move markets higher. Keep in mind that now we are trading below a downward sloping to a 50-day moving average. So 50-day moving average is sloping down. Sometimes this can be indication that markets are also looking to go down. So yes, monthlies are great, weeklies are great, but dailies look a little suspect unless the market can clear this very obvious daily RSI resistance. Let's take a look at some Asian markets. We begin by taking a look at the Hong Kong market, which has had a nice move higher over the last couple of months. Nice move ever since this breakout, and that breakout also corresponded with an RSI weekly breakout, as you can see here. And as long as the market is holding above that line extension, so as long as the market is holding above this line here, this market should continue acting well. Actually, if we take a look at the daily, remember the market was up about 1.7% on Friday, which makes sense because ever since we broke out in price here, which was sometime in beginning of April, this nice price movement corresponded with the RSI breaking out here. So we can extend this line. You can see that the market did come back and we saw support with a double bottom support here on a day-to-day basis. So Friday's 1.7% move shows that it is still respecting and holding above this line of support. As long as the market is holding above this line, it should continue trading well in the coming weeks, probably even in the coming months. We also saw China record new highs as it moved about 3% on Friday. And as you can see on this weekly chart, this is a fresh weekly breakout, taking out the previous weekly closing high. So that's a fresh breakout. Keep in mind, we've been talking about RSI holding firmly above 69.1 on the weekly, and it's been holding generally above 69.1 since sometime in September of 2014, which is somewhere around here. And you can see this nice acceleration in price. So as long as the markets are holding above 69.1 on the weekly, we should expect higher prices. On the monthly, we've been talking about also the fact that the monthly continues holding above 69.1, suggests that this market still is on a bullish phase. It's only when it moves back below 69.1 that it could start pulling back. Now we can get an idea of this because if you go back to this period here when it ran up significantly from about 1500 all the way to 6000 in a short period. So this absolutely unbelievable spike happened during this period here, when the RSI was holding above 69.1. And it's only when we move back below 69.1 that the market did show a pullback that hasn't been back to those highs. So as long as we are holding above 69.1 on the monthly, expect higher prices, and there's no need to be looking for a reason to short this market because this is an extreme bullish phase. You have to wait for the bullish phase to end, and you only can tell that the bullish phase is at least losing momentum when the RSI moves back below 69.1 on the monthly. Let's take a look at the Korean market, the KOSPI, which was up 1% on Friday, and we can see that it has come back. Now this was the previous line of resistance on the weekly during all this phase. So during all this phase here, this period, this market was trading and showing RSI. So we're talking about this period here sideways for the most part, and it is because the RSI could not hold above this line here. So this was where the market was struggling. So it's only until when it moved above the tops, only when it moved above this resistance line here, after moving above this level, we see that there was a recent price surge there. So let's take that off, and if we take the line extension like that, you can see that it came and bounced on that line there. So as long as it's holding on this line extension, this market should continue seeing higher prices. And just to clarify what I mean by that is, we see that there was a previous RSI resistance, and so the RSI on the weekly was showing resistance like this. Once it broke out, which is this period here, you see an explosion in price here, and it's coming back, testing this line and bouncing. So whenever you see that that has held, that suggests that the market is still on a bullish phase. So that support happens to be this support here, right here. So happens to be this support, corresponds with this support here. That's why I'm saying that as long as the market is holding above that line, so let me draw this again. As long as the market is holding above this line, it should continue seeing higher prices, which is also corresponding with this line here. Anything above that on a weekly chart shows that the market continues to be strong and should record higher prices also over time in the coming weeks and also in the coming months. And so it's only when we break below this line down the road, weeks ahead, if we ever break below that line, is when we should start looking for reasons why this market could pull back. For now, it ended the week showing support, so we are going to assume that the market wants to go higher. If we take a look at Japan, we can see that 8-2 closed at a fresh weekly closing high. Not all-time weekly closing high, but just recent weekly closing high. Nice breakout on the weekly, and we can see that that is yet showing another market that is strong. And also we can see that this happens to be nice support. If you go back a couple of weeks, so let me explain this. Just like the previous chart on the KOSPI, once the market broke out recently above this line here, this breakout corresponds with this move above 18,000, and so you extend that line, and again we see that the market came back and did show support exactly on the line here. So this back test was tested, it held, and now we see the market recording new highs. So looks very strong. Actually, if you take a look at the monthly for the Japanese market, you can also see that the RSI has held above 69.1. So it's been holding above 69.1 recently since this move here in October, which was also corresponding with this breakout in price, moving it above about 16,000 and change. So during this phase here, RSI moved above 69.1. This market has gone on to record as highs above 20,000. Why? Because the monthly RSI continues to hold above 69.1. Now on the daily, just like the other markets, so it's showing that the daily could be showing short-term resistance. So let me show you the daily. You can see that the daily has been making higher highs here in price, yet we can see that the RSI could be showing topside resistance, indicating that a pullback here would be negative divergence, showing that the market is due for some type of a pullback. So that's the problem, that the daily here is showing resistance. If this market is to continue higher, it needs to move above that line. For now, looks like resistance in my opinion, indicating day to day that the market could pull back, even though week to week, month to month, it looks very strong. If we take a look at the Australian market daily, we can see it has come back to test the 200-day moving average, which needs to hold. And we can also see that this market doesn't look great, because unless this 200-day can hold, maybe it can start building. Now, of course, we see that on the daily, we talked about this line of support. We talked about this in the last weekend analysis from a week ago, that as long as that is holding, that this market should continue at least recording higher prices. The only problem here is, as we mentioned last weekend and weeks before, is that the monthly is not great, because the monthly is still showing resistance connecting recent highs. So you can see resistance here on this top side line. That's a problem. Unless the market can move above that line, I would suspect that long term this market is struggling. Also, we can see that on the weekly, it is now testing this previous breakout here. It needs to hold above this previous breakout level. Otherwise, if it cracks and trades below that line, then this market is due for a severe pullback. So really, to summarize here, as far as the Australian market is concerned, it needs to hold this level around the 200-day moving average. Otherwise, if it breaks below that, one can assume that this is a bear market in the making. As we take a look at the Indian market, we see that on the weekly for the Nifty, we have this line we discussed last week, which is a line going back all the way to 2009 and also 2011. In fact, let me show you the same line going back a couple of years. Here we go. So this goes back to 2008, and we connect all these lows as we discussed last weekend, we see that the market needed to find support on that line, which is exactly what it did. So we see that this is good support. As long as this is holding and as long as this line has not been breached, we are looking at a market that could very easily move higher. So the weeklies look great. Let's take a look at the monthlies, and we can see that the monthly is also showing support. Keep in mind that we had drawn a line, something like that, where the market needed to stay above that line because this was the breakout entry of this nice move, and the market went on a nice run. So as long as the market is holding above this line, I would say the market should be okay. We also see that there is another line based on this break in 2011. So that break point there, we can draw a line like that, something like that. And as long as the market is holding above this line also, which was the previous break line, then the market should be looking to move high. In other words, as long as the market is holding above this previous break line, this was a nice entry once it moved above this blue line, for again a reason why the market had a nice move from here all the way to here, and now we see that the market is showing support here. So the monthly, in my opinion, also looks good. If we take a look at the daily for the Nifty, we see that there was a line here connecting the previous highs. We draw it somewhere like that, and this connects the highs here through here and going through that. So as long as the market is showing that it is moving above that line, which is the previous highs, then we have to give this market the benefit of the doubt. So this movement here, however slight, just does give the market an open field to where it can move higher. We looked at the MACDs the last time, and we see that the MACDs have already crossed over and moved above recent short-term node, so recent highs here on the MACD, and also just about to move back above zero. It's that movement above zero, like it did here early 2015, that led to this nice move in price. And so if the daily MACD can move above zero, that's a market that wants to move higher. Now the only issue here with the market short term is the hourly. If we take a look at the hourly, a couple of things here, we seem to have come to this declining line of resistance. As you see, that connects the highs there and also through these recent highs. So short term, the market looks a little bit tired on the hourly charts, even though the longer term time frames are good. And because the longer time frames are good, we have to assume that generally speaking, month to month, the markets do show a nice chart on the Nifty market. Let's take a look here also at the previous break line. So off the highs here, of that high, which is this RSI break level, and that break level corresponds with this break there. We draw a line from there, as you can see, like that. So a couple of observations since then, since this break, which gave us the high, the market did break also here, which was this drop, and we went lower. And since then, this has become resistance. So it's resistance here short term for this short term move, resistance here again, here for this short term move, and now we've gone above that red line and again above it and back below it. So it looks like at any point here we could break below. So this market needs to be above the red line, and also if we break this short-term support line here on the hourly, then we should be looking for this market to show a drop. So in my opinion, the hourlies do show a little bit here of a reason why the market could begin the week with a pullback. If we take a look at the Nigerian market, we can see that it has been trading sideways over the last couple of weeks. It needs to break out, and I'm using the ETF NGE, which trades in the US, needs to break out above recent weekly closing highs. Otherwise, there's no need to consider this as a market that wants to go higher. Now you'll notice that this market moves in step with crude oil, and I'll show you how that is true. You see this break here This break sometime in August of 2014 brought the market off the highs and had this massive plunge. One can even call that a crash. And if we take that break point, which is this break point here, and draw a straight line, you can see that this has become resistance short term. And until the market can clear this, indication is that more than likely this market is due to go down. Unless it can trade above that line and also trade above this level here at about 10.59, this market should be looking to go down, in my opinion. Compare that with crude oil, and here I'm using the USO. You can see the USO also broke down. Let's call it somewhere, I guess it's a break here, like that. And this break took place also in August, which is off the highs, and the crude oil also went into a crash mode. And so that line extension, if you do it like this, you can see that this market has been struggling to hold above that break line. So we see the same thing here. Unless crude oil can move above this line, I would assume that it also is due for a pullback. Otherwise, for it to do well, it needs to be moving above this line and also above recent weekly closing highs. So as the crude oil market goes, so will the Nigerian market go, in my opinion. And right now we are looking at weekly resistance. It's only until we clear RSI resistance and price resistance to the upside that the Nigerian market and crude oil can start moving higher. If we take a look at the South African market, which has been on a very nice multi-year rally, nice, and you can see generally speaking it has been holding above 69.1 going back to sometime in middle of 2012. And so every time it moves back above 69.1, you can see an explosion in price. Every time it recaptures that 69.1 level, it has been doing well. So as long as the market is holding above 69.1, I would give it the benefit of the doubt to record even higher prices. We can see on the daily, a little bit of a problem here. Daily needs to recapture the 50 level on the 50-day moving average. Otherwise, this could become resistance. Otherwise, it's trading okay because it's just around that 50-day moving average. Something it's done previously, for example, here and held. It held here and also here. So around the 50-day moving average, that needs to hold. It's a strong market. On the daily RSI, we see that it recently broke support here, and this support has turned into resistance. So we can see that this line here needs to be either tested and the market move above this line. If it can move above this line, maybe it sees higher prices. For now, using this daily chart, indication would be that the South African market is also due for a pullback. So as long as it's trading below this line here, it should pull back. As long as the 50-day moving average is resistance, there should also be a pullback. Otherwise, remember that this is a very strong market because of the monthly RSI. Eric Mwathe with Mwathe.com. Good luck, peace, and blessings. Woo! Yeah.